Can you actually make money day trading? Are day traders showing you a trading strategy but not showing you the results? Are you tired of losing money in the trading market? I will show you a day trading strategy that can consistently make you $1,000 plus per month. If you follow the steps in this video, you will be able to consistently make money. In this video, I will show you the exact strategy and criterias for an entry signal. I will show you examples of a long and short position. I will show you where to set your stop loss. And finally, I will backtest this strategy at least 100 times to show you the win rate and profit gain. Warning: following these steps can make you a lot of money, but nothing in this video is financial advice. Trade at your own risk tolerance. In this strategy, we will be using 3 different exponential moving averages: the 9, 13, and 21 period exponential moving average. However, we will not be using these indicators to look for a moving average crossover, as many others are doing. Instead, we are using these moving averages for pullback entries. Let me explain. Ever notice how candles break through the moving averages after a crossover and eventually bounce right back down, or even break through, which almost acts as a fake out? Well, what if we took advantage of these pullbacks and used this as an excellent trading opportunity? For example, if you look here, the candles broke up and then bounced back down. So, if we were to enter just on a crossover instead, then there is a good chance the candles could still go in the opposite direction. So instead, what you should do is wait for all the candles to be above the moving averages. Wait for a pullback to the moving averages, and if the candles bounce back, enter on a breakout from the previous resistance. Here is an example of a long position. First, the candles must be above all 3 moving averages, and once at least 5 candles or more are not touching the moving averages, wait for a pullback to one of the moving averages. Then draw a resistance at the highest close candle of the 5 previous candles. I know what you're thinking. How can I keep track of this in the live markets? Well, the good thing is, you won't have to. I will show you how you can automate this without having to look at the charts all day. Back to the strategy. Once you draw your resistance, wait for the candle to break out and enter on the close candle, and go long. For a short position, candles must be below all 3 exponential moving averages, and once at least 5 candles or more are not touching the moving averages, wait for a pullback to one of the moving averages. Then draw a line of the lowest priced candle of the previous 5 candles. Like I said, for a long position, you won't have to stare at your screen. The script will tell you when this happens and where to enter and exit the trade. More on this later in the video. So once you draw your line, wait for the candle to break out and enter on the close candle, and then go short. Stop loss. There are 3 different ways to set the stop loss. The stop loss can be set just under the moving averages, or can be set at the previous swing low for a long position, or previous swing high for a short position, or it can be set at a specific ATR value, which is the average true range. I won't go over what the average true range indicator is in this video, but basically it's a measure of volatility and it's often used for a stop loss. In this video, we will set the stop loss at 2 ATR values. And for our take profit target, we will target a 1.5 reward to risk ratio. In this strategy, we will be risking 2% per trade, meaning if we have an initial capital of $1,000, we are willing to lose up to $20 per trade. Then our position size based on this formula should be... Here's an example. Let's say we wanted to enter a trade on Bitcoin with an entry price of $30,000. Let's assume our stop loss is set to $28,000, so we can insert our numbers into our position size calculator. Therefore, our position size would be 0.01 BTC. Note: your position size will change for each trade. In the description below, you can have access to a free position size calculator. Now, before backtesting this strategy, we will use a script that we developed, which you too can have access to on our website. The link will be in the description below. You won't have to do any coding, just plug and play. Once you have access to the script, copy and paste the script into the Pine script section of TradingView. Click on this Add to Chart icon, and the script will appear. You can click on the settings icon to adjust the different inputs in this trading strategy. For example, in this script, you will be able to adjust the reward to risk ratio, initial capital size, the amount you want to risk per trade, the stop loss value, such as the ATR value that we will be using in this strategy. Furthermore, you can change the date range if you wanted to look at the trades that occurred during a specific time period, and you can also run the script so that it takes only long, only short, or both long and short positions. This script works across any asset in the crypto, stock, or forex market, and across any time frame. Furthermore, all the scripts on our website come with a custom display. The script will automatically display all the results in this dashboard, such as the number of trades found, the time it took to find those trades, the win rate of the strategy at that specific time frame and with that particular asset, the highest winning streak, the highest losing streak. In addition, the script will scale everything to 100 trades for easy comparison. The best part is, the script will tell you exactly when to enter a trade and when to exit a trade by giving you the visual markers for pinpoint entries. Now let's begin backtesting this strategy. First, we will be using the Triple EMA pullback strategy on the 5-minute time frame. We will be testing S&P 500 with a reward to risk ratio of 1. The stop loss will be set at an ATR value of 2, and we will be risking 2% per trade, and we will be starting with an initial capital size of $10,000. After choosing your inputs, click on OK, and the script will instantly backtest. After backtesting the S&P 500 on the 5-minute time frame, we were able to find 201 trades with a win rate of over 54%. This strategy had a highest winning streak of 8 and a highest losing streak of 6 trades. Therefore, if you are using this strategy and come across 5 or 6 losses in a row, just know that this is completely normal and that you can't expect to win every trade or every other trade consistently. Instead, you need to stick to the strategy for at least 100 trades and know that you will be profitable in the long run. The profit gain of this strategy after 100 trades will be nearly 17%, which is really good and beats buy and hold strategy with S&P 500, which moves on average 8–10% per year. So running this strategy for an entire year can potentially yield over 67% profit gain. Now we have proven that this strategy works with S&P 500 on the 5-minute time frame. But does this strategy work with another asset, or does this strategy even work if we trade it on another time frame? Well, let's find out. Let us change the time frame to the 15 minutes and see how it performs. As you can see, just by changing the time frame to 15 minutes, we only had a win rate of 47% and a profit loss of 26%. You would have lost money if you traded this strategy on the 15-minute time frame. So this strategy does not work on the 15-minute time frame with S&P 500. Let's go back to the 5-minute time frame and change the asset to the forex pair, dollar-yen. As you can see, the win rate was only 46%, and you would have lost more than 15% after 100 trades. So this strategy does not work with every asset and time frame, but we know it does work. So it is important to backtest the strategy to make sure it will be profitable before using this in the live market. To end this video, this strategy works well if you are trading S&P 500 on the 5-minute time frame. If you plan to use this strategy with other assets like Bitcoin or other currency pairs, you need to backtest the strategy. You can manually backtest this strategy, which could take you hours, or you can backtest thousands of trades within minutes using the scripts on our website. The link will be in the description below. In addition to backtesting your trading strategy, you need to stay disciplined with your strategy. As you see in this backtest, we had a losing streak of 8 in a row, which could cause many traders to deviate from their trading strategy. But if you stick to your strategy over the long run, you will be profitable. Most traders lack discipline. It is not the strategy that is lacking. It's the discipline that many traders need to fix. Furthermore, risk management is very important in your trading strategy. Do not jump into a trade unless you know 100% at what price you are entering, your exit strategy, and your take profit level. If you do not have an exit strategy, you can be caught holding a bag until the price keeps dropping, and dropping. Most traders make this mistake. Do not fall in this mistake. If you carefully follow the information in this video, you can make money in trading consistently. Thanks for sticking around till now. We will have much more valuable content that we will be providing soon. I would greatly appreciate it if you hit the like button, as these videos take a lot of time and effort. Leave a comment below if you want me to test this on another asset or time frame or with other reward to risk ratios. Subscribe for more future content.